For the past week, the most beloved stocks in this market, the artificial intelligence plays, they've been selling off like crazy. And today, the whole group got totally obliterated when former President Trump put the squeeze on Taiwan, saying they should pay more for their own defense. Given that they manufacture almost all the most essential chips that we need, that could be brutal for the industry. So everything from NVIDIA to AMD and Micron just clobbered. Negative pin action spreading into the everything AI-related areas. Supermicro, we heard from them earlier this week. Dell, HP Enterprises for servers. Arista Networks, what a great company for network equipment. Broadcom for hardware infrastructure. In other words, all the winners for the last year, and the trust has got a bunch of them. We did talk about them in today's meeting, if you want to go and look what I had to say. There's another AI hardware play that got hit hard today, or at least an industrial company with an AI kicker, even though it hasn't run anywhere close to as much as the pure plays have. I don't want to give up on what I consider the next industrial revolution, but I know it can take time before these sector rotations run their course, and they can be quite frightening, which is why I like some of these AI-adjacent names into weakness. They've got less downside. Specifically, I'm talking about Hubbell. Hubbell. That's a 135-year-old company that makes utility and electrical solutions. That includes so-called front-of-the-meter solutions used by utilities and telco carriers to help transmit and distribute energy to customers. Edge solutions, like the actual meters that allow data and energy to be distributed back and forth between utilities and their customers. And behind-the-meter solutions, used by owners and operators of non-residential buildings, manufacturing facilities, and critical infrastructure. So they really got the soup to nuts going here. Over the past 7 years, Hubbell moved towards higher tech products like smart meters and away from more commoditized equipment, especially in the lighting space. I know this is arcane, but bear with me. This is cool stuff. Hubbell's gone from a company that primarily served the construction and industrial markets to a company that mostly sells into the utility market with a much smaller non-residential construction business. Now, why does it matter that they're in the utilities? Well, given that the demand for electricity is off the charts in this country, thanks to the AI-fueled data center build-out, Hubbell's end markets now much faster growth than the old end markets. And best of all, they carry much higher margins, so they make much more on everything they sell. And that's because this company now has major exposure to some of the strongest secular themes of the market. Even if the stock market's put many of them to the meat grinder over the past week, and they're flushing out all the weaker hands. Again, that's what's going on. We don't know when it's going to end. We're trying to find good companies to buy into the weakness. First, there's reshoring. Companies bringing back manufacturing in the United States after global supply chains got so snarled during the pandemic. These new domestic manufacturing initiatives have led to mega projects all over America. And these projects need to connect to the power grid. Hubbell's there to help them do it. After these mega projects come online, they'll result in energy load growth, which benefits Hubbell's utility customers, too. The second major theme, grid modernization. Now, we've seen major failures in the nation's electric grid in recent years. It hasn't been updated in years. No one put money into it because no one thought it was going to grow. And given that electricity demand is now growing at a 5% annual clip, it hasn't grown for years. Things will only get more difficult if we don't modernize our grid. That's why I keep telling you that's a great business. Thankfully, there's lots of federal support for these efforts. The $30 billion combined from Biden's infrastructure bill and the so-called Inflation Reduction Act. Ultimately, if it brings down power, maybe I'll stop being so sarcastic about the name. But this is great news for Hubbell, because many of their products help automate energy transmission and distribution operations. That's exactly what we need to modernize the grid. Third, there's sustainability and alternative energy. When new wind or solar farms get built and plugged into the grid, that means more sales of Hubbell's products. But Hubbell also makes products that help building owners use energy more efficiently, lowering their costs and helping them hit their sustainability goals. Many big companies have those goals. Some little ones, too, now. Last but not least, how does Hubbell benefit from the AI-fueled data center boom? Simple. We're going to need a lot more energy to support these facilities. And when utilities expand their production or transmission capacity, they need equipment like Hubbell's. More important, Hubbell first came on my radar as an AI play in March when the company was part of a presentation during NVIDIA's GTC event. Remember I went out there in San Jose? It was about the increasing complexity of the electric grid in the AI era. I didn't know anything about this. The main message, we now need AI to help manage the grid because power grids will have to do things like adapt in real time to severe weather, facilitate two-way power flow with more home solar assets and electric vehicles, and manage costs as energy gets more expensive and resource shortages and expensive infrastructure upgrades have to occur. In fact, there's an NVIDIA-backed startup called Utilidata looking to introduce AI decision-making to the grid. And earlier this year, they announced a partnership with a Hubbell subsidiary that specializes in smart meter technology. They're the first company to embed Utilidata's platform in their smart meter systems. And I know you always tell me Please tell me what Jensen Huang's up to, and this is one of them. This partnership is still in its infancy. You can't expect much in the way of revenue from it anytime soon. But Jensen Huang, the visionary CEO of NVIDIA, as just mentioned, seems very focused on this project and more generally on using AI to modernize the grid. Remember, he also wants to have the grid generate less heat, obviously reduce the carbon footprint. Now, last month, Hubbell hosted an investor day where it gave us some additional color on the data center opportunity. Again, it's not a huge business. We accounted for just 3.3% of Hubbell's sales last year. But management expects this to be one of the fastest growing businesses with double-digit organic growth through 2027. Hubbell's also acquired a company called PCX 2 years ago, which makes modular power solutions, again, for the data center. PCX has great relationships with the hyperscalers who'll be doing the most data center building. They're involved in the early construction phase of data centers. Remember, data centers are all down right now, so this is why we're presenting this piece now. So PCX represents a foot in the door for Hubbell, which management believes will help them cross-sell the rest of their electric hardware. Why do I bring up Hubbell on a day like today when the stock's down 6%? I mean, shouldn't I be focused on, I don't know, Solventum or something? Well, because you're not chasing the stock. Look, hey, how about I come to you here, right? I say, listen, you got to buy this at 387. It's going to 400. Well, you know what? That's called being a chump. This is when you come in knowing that it could go here, maybe here, but it's not going to go here, okay? Anyway, while this is a new suit, so I didn't want to go all the way to the floor. Well, it's been an excellent performer, up 92% over the past 3 years. The stock's already pulled back from 429 at its April highs to 366. Doesn't mean it's going to bottom here, okay? It just hasn't had the insane short-term moves like the pure plays on AI. So it doesn't deserve to be selling off hard. If you want to buy 100 shares, you buy 25 tomorrow, and then you leave some room and buy some more. Plus, Hubbell's last quarter was strong. It's just that management left their full-year forecast unchanged when Wall Street wanted them to raise numbers. They report again in 2 weeks on the 30th, and while I don't have any reason to be negative, you should know I am not recommending this as a one quarter play. It's a long-term story. But here's the bottom line. More than a year and a half into the AI boom, we're now at the point where many of the most obvious AI winners are well-known, richly valued stocks that can easily fall prey to vicious declines during this kind of sector rotation. And that's why I'm researching the relatively under-the-radar AI plays like Hubbell, a lesser-known supplier to the utility energy industry that has a good business now, but will do even better as the AI theme continues to take off and the mega caps build new data centers everywhere, regardless of who is president. Let's go to Peter in California, please. Peter.
Hi, Jim. I'm talking about
Peter.
Alphabet, GOOGL. I know it's got an AI play. I've had the stock for at least 6 years. I'm making a 250% profit. Is this still a hold, or should I take some profits from the stock?
First, it's an inexpensive stock. We did take some profits for the Charitable Trust in this company. Why? Because it ran up so much. And I'm not going to tell you that you shouldn't if we took some profits. That said, it's not that expensive, and it's a really good business. And you know what? This too shall pass. I mean, this stock could be, it's 181. It could go to 160. And all that would happen is you should be a buyer, not a seller. So I'm okay with it. Tom in New York. Tom.
Jim, good evening.
Good evening. What's up?
Thank you for taking my call.
Of course.
And let me start out with a great monthly meeting today.
Oh, thank you. Thank you very much.
Kudos to you, Jeff, and everybody involved.
Yeah, Jeff did a great job. And, we're sensitive to the idea. I wasn't positive about most stocks. I think they're going to come down. But we got capital. We want to do some buying. And, that's what you do into these panic sell-offs. How can I help?
Jim, I called you a while back, right after the IPO on a cybersecurity startup. And I was wondering what your thoughts were nowadays after their solid first quarter numbers. Rubrik, RBRK?
Yep, and I said I liked it, and I continue to like one of the companies that have come public in this period that I think makes a lot of sense. It's data security and cloud management. Now, there are a lot of companies that do that. I just said I wanted Rubrik on air because I think it's a very exciting company, and it's been a big winner, and it was still up today. So anyway, thank you. Thank you for the kind comments about the meeting. This was the hardest meeting that we've done in, I don't know, I can't tell how many years, because we're trying to buy stocks that are going down, and we know they're going down. It's very tough to tell people to do that, but we don't know where they're going to bottom. Most AI winners are known. I want to look for the under-the-radar names, and I've come up with Hubbell. I think it'll really start to shine as the AI-fueled data center build-out continues to take off. But we know, again, these groups are in down mode. You buy a little at a time. First, Horizon reported this morning, cutting its net interest income outlook and setting the shares lower. Bummer. I'm seeing if today's decline could be a buying opportunity if the stock's strong showing so far this year. Then Cramer fame Chipotle has been dogged recently by complaints of high prices and smaller portion sizes. So what do you do with this stock like this that's become a bit of a piñata? I'll give you my take. And of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.